So Donald Trump has just announced plans to visit Fort Knox to verify the US gold reserves, something that hasn't been audited in detail for decades. This unexpected move comes after Elon Musk publicly questioned whether the gold was really there. With growing concerns over transparency, Trump has made it clear that if the reserves aren't as expected, there will be serious consequences. So what's really going on, and why is this happening now? Let's take a look. So what has triggered all of this? Well, a confluence of things, but much of the hype around what is going on with gold in Fort Knox isn't because of what's happening there, but what's happening in London and what that says about the gold that is heading from there to the United States. We know that vast amounts of gold are being shifted out of the Bank of England's vaults at a rate not seen in years. But what's fascinating is why it's happening and the sheer scale of this logistical challenge behind it. Because this isn't just a simple transfer of assets. We've got traders going on and major stakeholders who are racing against time. They're scrambling to physically move gold across continents. But here's what makes this even more interesting. In a financial system that's becoming increasingly digital, it's becoming increasingly fragile, and some may well say unstable, well, this entire situation is proof that physical gold still reigns supreme, because you can't print it, you can't duplicate it, and you certainly can't just click a button and send it across the world in an instant. Now, a recent Bloomberg article really highlights just how intense this situation has become. And it really brings to the fore how physical the gold market is and all of the stakeholders who are involved in it. For the first time in years, London's gold reserves are being withdrawn in record volumes. And this isn't just some kind of casual, routine, standard movement. It's because we've got this urgent push to get this bullion from London to the US. And it's set off this chain reaction, which is putting pressure on every part of the supply chain. Now, since the beginning of the year, the small team that work deep below the Bank of England, well, they've been overwhelmed with what's a pretty back-breaking job of retrieving, preparing for shipment these thousands of gold bars. Now, of course, this isn't just about central banks quietly adjusting reserves from one bar being moved from another shelf. It's about traders chasing an opportunity. Because as we explained just a couple of weeks ago, this is all mainly happening thanks to speculation over US tariffs on gold, which has ignited a rush to buy physical gold in London, sell it in New York, where prices have surged. Now, at the peak of this trade, the gap between the two markets was as much as $50 per ounce. And of course, this is a fortune when dealing with millions of ounces. But is it just because of this arbitrage trade opportunity? And is it just because of tariffs? Is it because people are anxious that they're going to monetize the US balance sheet and they're asking, where is the gold? And here's the thing, gold isn't some digital asset that you can instantly shift over with just a few keystrokes. It's heavy, it's real. Getting it from one place to another is no small task. And right now, the infrastructure that's needed to get this flow going was under huge strain. Now, the Bloomberg article quotes John Reed, who's the senior market strategist at the World Gold Council. And he very simply put, the situation in London is temporary, but it's causing some major disruptions. There's less gold available than usual, though the supply itself isn't running out. And as we all know, even the tiniest of temporary disruptions can have these kind of ripple effects. The process of moving large bars of gold is actually a bit of a nightmare. Because unlike digital assets, which just exist here in cyberspace, gold is an actual, tangible object. It's got to be tracked, it's got to be weighed and securely transported. You cannot be taking shortcuts when it comes to gold. And the Bank of England vaults, well, they're just not set up for this kind of rapid withdrawals that we're seeing right now because they're not commercial vaults. They are there to store gold for the long term. And logistically, this is just really hard to manage. The vault setup means every bar has to be carefully located, has to be brought out of storage, and then has to be transported in an extremely secure and very methodical process. And of course, the bottleneck doesn't just end in London, because as we explained previously, once these bars are finally out of that vault, they're not actually ready for New York yet. Because as we explained, London's gold is actually just the wrong size for the New York market. That means every single bar needs to be melted down and recast before it can re-enter the American market. And of course, that brings us to the next problem. The refineries are just at max. As the Bloomberg article tells us, the refineries in Switzerland, which really is like this big global hub for gold processing, they're just at peak throttle. They are trying to keep up with demand. Now, there's a great quote here where the precious metals refiner Arga Horaeus confirms that the surge in orders for smaller bars has been incredible. Our refining capacity was maxed out in December, January, and it's already booked solid for the next few months. This entire situation reinforces something every gold investor already knows. Gold is real wealth because unlike stocks, unlike your bitcoins, your other digital currencies, fiat money, gold can't be created at the push of a button. It can't be erased, it can't be hacked or inflated away. It exists outside of that financial system. And in times of uncertainty, this is why people are rushing to it. Right now, billions of dollars of gold are physically moving across the world. These aren't just a few digits on a screen, but they are real heavy bars moving. And if the world's biggest banks, hedge funds, traders are scrambling to secure that physical gold, the real question is, well, who's the gold for? Is it there to go on display for Donald Trump when he pays Fort Knox a visit? Is this something they've been preparing for a while? Perhaps, but will we ever really know? It's unlikely. The bigger question here for investors is there a gold shortage? No, but the system is showing cracks. Logistics are overwhelmed, refineries are overloaded, and the demand for real physical gold has never been clearer. We are in a time of digital instability. Gold remains what it's always been, a store of true, tangible wealth. So what happens next? Will that gold make its way to Fort Knox, or will the gold flood back into London? And just how long can the vault workers in the Bank of England keep up with this pace? Let us know what you think in the comments below, and don't forget to hit subscribe. Because in times like these, gold isn't just an investment, but it's becoming quite the story.